As a grand experiment in US monetary policy likely concludes, investors are banking on soothing words from the Federal Reserve that limits market volatility. When the central bank releases its October meeting statement on Wednesday, investors expect the remaining $15 billion of monthly bond purchases will end. They also expect language that suggests any tightening of monetary policy remains a story for the latter half of 2015, diffusing any return of the kind of market turmoil that we saw earlier this month. In the wake of the S&P 500 briefly erasing all of its 2014 gains and Treasury yields plunging spectacularly during mid-October, markets have stabilized. Share prices and junk bonds have rebounded smartly. But the question now facing investors after nearly 6 years of large-scale bond purchases that has swollen the Fed's balance sheet to $4.45 trillion is whether the US economy can prosper and subsequently justify the large appreciation that we've seen in asset prices. As this accompanying chart shows, there's a clear link between the swelling of the Fed's balance sheet and the appreciation we've seen in the S&P 500. A similar story also exists if you look at a chart of junk bond yields and other types of asset classes. So as the curtain closes on the Fed's third installment of QE this month's market turmoil provides a glimpse of what may lie ahead for investors, with the central bank no longer pumping so much liquidity into the financial system. Some believe the end of QE will reveal those asset classes lifted by their own fundamental strength, but also those which have been merely floating on the sea of such liquidity. The general view is that the Fed will therefore provide markets with a friendly or so-called dovish statement on Wednesday, and in effect wait to see how forthcoming data unfolds. Ahead of this, the S&P 500 rose 1.2% on Tuesday, and the broad benchmark has now recovered nearly 7% from its low seen in mid-October. Another factor supporting asset prices as the Fed ends QE, of course, comes from the actions of other central banks. The Bank of Japan continues ramping up its bond buying program, and speculation rises that the European Central Bank will also follow suit. Moreover, the Fed's balance sheet will remain elevated for some time, and another bout of market turmoil and weaker US data could well spark yet again another QE program. The Fed put is alive and well.